Hello, I'm Chase Wilsey. I'm with Wilsey Asset Management, and welcome to today's edition of the Smart Investing Daily Briefing. As you can see, I'm standing on Brent's side. He's not here today. He's at an investment conference. Lucky guy. But let's get down to what we're talking about today. Today we're talking about new home sales surge in the month of July. As you can see, going back to June, there was a 10,000 home revision to the month, and it was down to 582,000. But this is where the numbers just really blew it away. As you can see, the consensus estimate for July was 580,000. The actual home sales on an annualized basis was 654,000. That's a level we haven't seen since 2007. So really blew the numbers out of the park there. Kind of interesting here. Median price did fall 5.1% down to $294,600. So kind of surprised to see that. Maybe that's why we saw such a big increase. There's a lot of millennials and younger people still living in their parents' basements. Maybe this lower price is what's getting them off the couch to buy those homes. Supply, as you can see, very, very low at 4.3 months versus the 5.2 months last year. So again, bottom line, homes are selling. Maybe it's time to be looking at a home builder. So that's why we're going to take a look at DR Horton Inc. They're actually the nation's largest home builder. Going back 5 years, the stock has done very well. And within the last year, the 52-week range, $22.97 is the low. The high is $34.56. Current price around $33.01. Now talking about DR Horton, they are headquartered in Fort Worth, Texas, and they operate in 27 states and 79 markets total. Curious to see kind of the breakdown here of where they operate and if they favor any area in particular. Kind of curious if they favor the South, which had a great month of new home sales. In the South particularly, sales were up 18.1% for those new home sales. Again, would want to understand where they're generating revenue, what parts of the country that is in. And see sales over the last 12 months up 14.5% and earnings per share up 22.6%. Balance sheet's a little interesting for these home builders. Debt to equity looks good at 50.69%, but there's no current ratio. Now looking at the balance sheet, they do kind of have some different structuring with the balance sheet as they have a lot of land and inventory on those homes. So very important to understand the balance sheet for these home builders. Now finally, going forward to March 2018, estimated earnings per share on a GAAP basis, $2.65, gives a target sell price of $43.73. So that's a pretty good estimated return there. I like what I'm seeing with these home builders. Again, a lot of pent-up demand by people my age, those millennials still ready to move out and maybe buy their first home. Well, I hope you enjoyed this edition of the Smart Investing Daily Briefing. If you'd like a free report, the 5 big mistakes the average investor makes, give us a call at the office. Our phone number is 858-546-4306. And if you've missed any previous Smart Investing Daily Briefings, go to our website, smartinvesting2000.com.